FinTracked, finance extracted. Let's dive in. The ongoing Iran-Israel conflict is more than just a regional issue. It has far-reaching impacts on the global economy. Today, I'll walk you through exactly how this conflict influences everything from oil prices to global trade and even your wallet. Let's start with oil prices. One of the most immediate effects of any tension in the Middle East, especially between Iran and Israel, is on global oil prices. The region is home to the Strait of Hormuz, a narrow waterway that's basically the global oil lifeline. About a fifth of all the world's oil passes through there. So whenever there's a threat of conflict or even the possibility of shipping disruptions, oil prices spike. You'll see it at the pump. Suddenly, filling up your tank costs more, and it's not just a local issue, it's global. But it doesn't stop at oil. This conflict also disrupts global trade routes. Cargo ships carrying everything from electronics to grain navigate through these waters. When there's tension, shipping lanes can get blocked, delayed, or rerouted. That means higher shipping costs, supply chain headaches, and goods taking longer to reach shelves wherever you live. Then there's military spending. As tensions escalate, countries, especially allies, ramp up their defense budgets. The US, for example, might send more troops or military hardware to the region, boosting defense contracts and arms deals. This isn't just about security, it's big business, and it means even more money flowing into the military-industrial complex. All of this uncertainty sends shockwaves through financial markets. Investors get jittery. When headlines break about missile strikes or new sanctions, the stock market can swing wildly. Money rushes out of risky assets and into safe havens like gold or US government bonds. Energy and defense stocks might soar or crash, depending on what happens next. Currencies get caught in the crossfire too. The US dollar almost always gets stronger in times of crisis. Meanwhile, currencies of countries closely linked to oil like Russia or Iran can drop fast, especially if sanctions or trade disruptions kick in. It's a financial tug-of-war with real-world consequences. And here's where it hits home: inflation. Rising oil prices, higher shipping costs, and increased military spending all push up prices. Groceries, gas, electronics, everything starts costing more. For developing economies which rely heavily on imports, this can be especially tough. Inflation eats into paychecks and makes daily life a lot harder for millions of people. If the conflict drags on or escalates, the global economy could slow down even more. Businesses might hold back on investing. Consumers might spend less. Empty stores, slow traffic, and weak economic indicators could signal a looming recession. It's not just a distant problem, it's a global domino effect. So, the Iran-Israel war might seem far away, but its impact is anything but distant. From higher oil prices to inflation and disrupted trade, the ripple effect touches every corner of the world, including yours. If you want me to do a deep dive into oil prices and what the effects could be like for the global economy, leave a comment below. Stay informed, and make sure to subscribe for more insights on global events. Before you go, don't forget to stay connected. If you found this video helpful, hit the like button, leave a comment with your thoughts or questions, and subscribe so you never miss an update on global finance and economic trends. And see you in the next video.